The sheer amount of debt that we have is unbelievable. It's accumulating faster than it can be understood. It's so out of control that no banker would dare attempt to propose a solution. Ignoring reality is the best way. But some of us just want the cold, hard truth. And that's why you came here for the truth. So let me unveil that for you today. We are going to look at several economic indicators, a lot to cover in this episode. We'll get into it right away. Let's begin with corporate debt to GDP. Yes, in fact, this is the broken record GPS, because I have shown countless times that we are encountering the exact same issues, and every time it happens, a crash follows. Take a look at these 3 previous times and what had happened after. Does that mean necessarily that we are going to head down in the near future? Well, possibly, but I'm not a soothsayer. I'm not a fortune teller. I'm unable to determine that. But what I can tell you is that for hundreds of different indicators, they have been pointing to the exact same thing. There have been so many cases in which we have hit certain points or surpassed them. And historically, that has led to a crisis afterwards. Many people have been pointing to the inversion of the yields, looking at different technical analysis, different indicators, and I think that's important. But we also need to look at what has been occurring geopolitically. We need to look at the fundamentals. We need to piece it all together. We can't just look at one thing, and that's what I try to bring you here. Now, I'm going to go all over the map today. There's so many things I want to cover. So let's look at this. Corporate America partied like never before on cheap money over the past decade, and now comes the hangover. Can you believe it? Bloomberg is actually saying this. Look at this. Companies will need to refinance an estimated $4 trillion with a T dollars of bonds over the next 5 years. That's about 2/3 of all of their outstanding debt, according to Wells Fargo. This has investors concerned because rising rates, obviously, means it will cost more to pay for unprecedented amounts of borrowing, which could push the balance sheets towards a tipping point. And on top of that, many see the economy slowing down at the same time the rollovers are peaking. If more of your cash flow was spent to servicing your debt and not trying to grow your company, that could, over time, if enough companies are doing that, lead to economic contraction. A lot of people are worried that that can happen in the next 2 years. Okay, they're saying 2 years, but of course they always overestimate on that. I think it'll be a lot sooner before we have a problem. Maybe there will be a massive bailout of, $10 trillion, and supposedly the problem will be fixed. I'm not able to determine that, but I can say that we are facing a crisis. $4 trillion of bonds that have to basically go ahead here with higher interest rates. That's not good. Really, really not good. And the percentage of which is just incredibly high. Maturing debt. So you'll see here 2018 and over the next few years, it's going to continue to go higher and higher and higher. And then it will begin falling. But you have to realize the amount of debt that's out there. Even when we get to 2026, for example, it's still $500 billion. And that assumes that everything is going to stay the way it is. We're in for one hell of a ride. Higher interest rates are going to really, really put a lot of pressure on the economy. Okay, I'll be nice about it. Switching gears a little bit, I couldn't believe this myself. I knew, and I've done videos about it, I've done research about it, I've talked to people from Illinois, I've seen it all happen, but now I didn't actually, calculate the percentage. So WirePoints has actually done that. So I'm bringing this to you. Illinois, the highest in the US for property tax rates, 2.67%. Now I'm sure there's fine print, depends on this and that. Okay, there are factors involved. But regardless, it's ranking number 1, and that's a bad thing, as the highest in the nation. 2.67%. New York, 2.53%. New Hampshire, New Jersey, Texas. All right? Let me show you something. Where I live, in Toronto, it's bad. People are overburdened. Now works a little differently here. You can't just take one particular tax. Like for example, there's a land transfer tax whenever you're buying a property, right? So when you do so, you have to pay a certain fee, certain percentage. If you're inside of the city of Toronto, not let's say on the bordering towns and cities, you have to actually pay a double land transfer tax. Okay, so you get double taxed on that, and these are like really, really big chunks of money. Anyway, so you can't just say, okay, well, the property taxes are this much, therefore, all taxes are higher or something. Things will be lower, things will be higher. Depends, but you look at the overall taxation. But if I could just focus for a moment on property taxes, you can see, depending on the breakdown here, residential property 0.46%. You have this other the education tax, city building fund, but let's just take it for this, okay? 0.64%. 0.64%. Now I don't know based on what we were looking at, what exactly that includes. Anyway, let's just say 0.5, okay, for the purposes of this video. I thought that was extremely high. Because you're paying thousands of dollars a year. That means hundreds of dollars every single month to rent your land. And if you live in a condo where you're stacked 50 floors up in the sky, you don't really even have land. Why are you even paying property tax for? If you've paid off your mortgage, why are you paying property tax? Why are you ever paying a tax to this? I'm speechless. This is the most criminal thing, except for income taxes. Don't even get me started on that. Don't even get me started. Now, talking about taxes, talking about things that are rising in price. I just filled up gasoline today, and my goodness, it's ridiculous how much we pay. And I know that I've covered it before. Different parts of the US pay different rates. Looking over, this channel this is amazing. The people on this channel, those who are watching every day, are incredibly knowledgeable, helpful, good people, okay? 99%, 95% of the people on here, and I thank all of you. I did videos before asking, hey, wherever you are in the world, let me know what your gas prices are. And I got so many replies. All of a sudden, myself, and I'm sure you as well, you learn so much. Because you can see, okay, well, these people are in Norway, that's what they're paying. These people are in Australia, that's what they're paying, and so on. Anyway, not to digress. Looking at this, gasoline prices could see summer spike with prices at 4-year highs and record demand. Gasoline prices are expected to reach $3 as a national average for unleaded gasoline this summer. That's a 4-year high. Obviously, everybody knows why this is going on right now. Geopolitical tensions. Not going to say more. And supposed record demand. I don't agree with that. But anyway, looking at this, you will see that the prices have been rising. Of course, yes, oil has been rising, but the price of gasoline has risen far beyond that. I mean, I love to just draw it out if you don't mind here. So, like, this is, let's say, oil prices rising, just constant rising. But gasoline prices are rising in this direction. It's, to me, we're being conned. Anyway, this is going to continue to get worse. There's no doubt about that as the tensions escalate. But even if they do come down, so you'll see oil, let's say, come down and it starts to find, sort of a better, more calm rise, you'll just see, the gasoline prices will just dip down a little bit and then come back up. It's a joke. We're being ripped off. With gas prices soaring, thieves are doing their best to get a fill up without going to the pump. Gas siphoning is back. This is a continuing problem that has been going on. I'm not going to get more into this, but you can see where I was going with that. I'm going to cover so many different charts here right now. I'm just going to fire through them really quickly because I don't have much time here. Look at this. Federal Reserve Treasury holdings from 2007 to 2018. They've been increasing here. This is specifically the treasuries because remember the Federal Reserve holds more than just the treasuries. But this is them. You could see how they have been declining. Don't worry because in 12,000 years from now they're going to be all gone. Such a joke. Maturity breakdown of the Federal Reserve Treasury holdings. I thought this was interesting. You can decide for yourself what this all means. But as they have been, doing Operation Twist, for example, where they were able to get off all the short-term debt and then pick up more of that longer-term debt, things have been changing ever since because, that was taking place, if memory serves correctly, around 2013, maybe 2011. I'm, finding it hard to remember as I do the video right now, but looking at this regardless, either way, as these years have gone on, we have seen that, the maturity of which these are, coming due at this time it's an interesting scenario. Look at this here. You can see that 2015 marks this time frame in which we have seen this long-term debt over 10 years going on consistently. You have seen the 5 to 10 year really shrinking. You have seen a massive quantity of 1 to 5 year. Okay? And then also the shorter term debt has picked up quite a bit. So I just wanted to mention that to you. I found these charts. I thought they would be interesting to some people. I'm sure not to everybody. This is another chart here. I'm not going to go over the details and bore you. But if you're interested, oh, there we go. Operation Twist 2013. I was right. There you go. But what I would say is that the Federal Reserve, so if they're going to get rid of, what's happening right now, is not that they're not printing money, because they print money, but they keep the amount that they have on their balance sheet at a certain rate. Okay, so they're always trying to maintain a certain rate, certain amount. So as ones are basically being let off, they're being left with all this long-term debt. So what are they going to do if they're sitting on a pile of all long-term debt? How are they going to get rid of it? How are they going to, basically shake it off if, let's say, they get rid of all their short-term? And they say they're going to be getting rid of $50 billion a month. How will they manage that? They're going to sell off all of their short-term debt pretty soon. Okay, moving on quickly. Foreign Treasury holdings. Now you're going to see something here. It's not the BRICS, but it's the BLICS. And I looked this up. This is, if I'm not mistaken, Belgium, Luxembourg, Ireland, Cayman Islands, and Switzerland. When I found this, I think it was a day or two ago. So, my memory might be a little bit hazy. But these actually, a lot of talk about these places just really being almost like shell companies or hidden from us. Like, what is Brussels exactly? The country? No, not necessarily. It could be meaning the ECB, right? Could be something else. So these are more areas where money is sheltered and things. So regardless, you can see that the amount since the financial crisis has really picked up. China over the years has really been around the same amount. Yes, they're holding obviously a massive quantity, but it's been, sort of standstill, whereas you look at the BRICS and they have been increasing. So it's interesting to see the difference there. This year, just you can see Belgium as an example. It's just showing you that spike that increased during the time frame around the QE taper time frame. And U.S. Treasury buyers change in holdings as a percentage. Looking at this here, foreigners clearly declining over this time period from that 2008, 2014 up until the 2015, 2018 time frame. So very quickly, just wanted to note this. These 95 apartments promised affordable rent in San Francisco. Then 6,580 people applied. Wow. So they have this lottery system in which people can get affordable housing, but the amount of people applying for it is like, orders of beyond the orders of magnitude higher than what is actually available, and that's truly unfortunate because there are so many people that can't afford housing, and whether it's rent, no way they can afford that, and don't even talk about buying a house when prices are $1.5 million for a house, when a condominium is going to run you for something not nice is going to run you $500,000, maybe upwards of $1 million. It's just not going to happen. So this is a really unfortunate circumstance for a lot of people. I'm going to end it there. I went all over the place today, but I hope you do appreciate this information. If I have information to give, I give it. I'm not going to necessarily just do one type of video all the time. I want to be able to give you lots of different information because I know that there are people all over the world. There are people who have different levels of interest in different things. So I want to bring you just good information. If you appreciated it, give me a thumbs up. That supports me, it supports this channel, helps to get this information out there. If you found the video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can actually flip through these books. All you gotta do is go over to Amazon. There's a look inside feature. It will allow you to flip through the pages of these books to see if you like them. Take care.